And one of my edges is that I do very well trading the extremities of a range. Even if it doesn't break down to the levels that I want, I know there's enough juice in here to capture a fairly good 2-3 hour trade, and I'll take profit, which I did at 114, 115. So, you know, at the end of the day, I think psychology and mindset has a big part to play in trading and execution. But overall, I think when especially new traders, when they catch a trade and they get a good entry, they have a tendency to hold on to the trade. And lo and behold, before you know it, the 1 hour target that they were aiming for, they end up holding it because they think it's going to go even more in their direction, and that price isn't ever going to reverse against them. But a few hours later, a few days later, they end up puking it back at break even. And that's just shocking trading. If you're in a trade and your trade is going in your favor, in your direction, and then just to watch it come all the way back on you after it's been in a fairly favorable direction for you, and to puke it at break even for a loss, that's just disgraceful. There's no excuses for that.
I love that, first of all. Shout out to TraderXO. You know, I think one of the big things I've always learned from him, and I think it's even posted on his Twitter, it's, you know, the plan and then the trigger and then waiting. This is where you fuck up, right? It's like people have a bias and they have an idea of like what they want to see. But then when it comes to the execution, which is, again, everything in this business, right? Like, you're a trader. You don't get paid to have a bias. You don't get paid to post charts on Twitter and get likes and all that. No, you get paid to, you know, take fucking trades and make money. It's that simple. So at the end of the day, I love the way you break it down and make it so succinct that, you know, if you have a winning trade, I think a lot of times people get caught up. I've had this happen to me myself. You get a really good entry, whether it's a swing long, swing short, and you're like, oh, I caught the top, oh, I caught the bottom, but it's fucking irrelevant, right? At the end of the day, what matters is, do you take profit? What is the R on your trade, and what is your expectancy? And then you look back at your journal and say, okay, well, this is how I did. I journaled my emotions, right? I thought I had a top short. I was, you know, very vocal about it on Twitter. It was all great. Just to watch it round trip. Yeah, like you said, that's a disgrace, man. You're not paid to just have a bias. You're paid to I
mean, if you look at it from a monthly perspective, we haven't even broken market structure, to be honest with you. Zooming out, look at the chart. I always start from a high time frame context because of the fact that we've been in such a tight range. This is our Q swing lower low. We print another lower low, and this is a lower high. So we haven't even broken market structure on a monthly chart. Yes, you could argue on a weekly that the price is printed a higher high, but we know really the real context, if you want to be bullish, is on a monthly context. So for me, I really need to see a shift in market structure on the monthlies. But I still think we're a long way from, when I say long way, I'm talking about, I still think we are going to go through a phase of accumulation, even if we do see 27, 28. I think it's not done and dusted. We could see another move back down over the next 6 months down to these range lows, in my opinion. If you look at this from as a 1 hour chart or a 4 hour price fractal, is just a bear market rally before we get an accumulation range, which is going to be really drawn out, and everybody's probably going to be bearish here once again, like they were down here. So, you know, it remains to be seen, in my opinion.
Could you actually take a quick second to kind of break down how you look at ranges in general? I think a lot of our viewers would benefit to hear kind of your mindset when approaching ranges, range lows, deviations, et cetera, et cetera.
Yeah, it's. I think I do this regularly on my streams as well, and my point is such that, look, I think this is a strategy that I've refined. I was introducing to trading ranges and dealing ranges by SC back in 2017, 2018, and really refined my own take or version of how I trade the range. Essentially, you can map a range on any chart, whether it's a 5-minute chart, a 1 hour chart, a monthly chart. And essentially all I'm looking for is those extremities of any given high time frame range. What do I mean by high time frame? Anything from the daily to the weekly to the monthly. Because what you find is that at the range high, not the range low, I'm just finished drawing out a range here. Those are the extremities of the range. Now, there's a few reasons why I like doing my trading at those levels, because one, you're likely to see a very good reaction from these levels, okay, when price comes into these levels. Secondly, it helps me understand how I'm looking to get on board of a trade. And thirdly, it depends on the context of the environment. So if price is in a range-bound environment, then for me, it's just a matter of ping-pong, trading the range until we get a breakout of the range. The other context is price coming down in a trending environment into the range lows. This is where you have to think about how you're going to execute at the range lows. Just because price is coming into range low does not necessarily mean that you start buying at the levels. What I generally like to do, I have a very simple two strategy trigger point. It's much more refined, props out of the context of this video. But when you have a trending environment, price is coming into range. Essentially what I'm looking for is any deviation below, reclaim back inside. That to me is a favorable option that gives me conviction that I can possibly play this to the range quarter or the mid range. Okay. The second option is that, okay, if price is in a trending environment coming down into the range, I may start scaling 1/3 here, knowing or accepting the fact that I could be wrong and I could be early onto the trade and it could push further down, stop me out. Then all I'm doing is essentially waiting for this to go as far down as possible as it likes before it can come back and reclaim the level. Then I'll go again and take a second stab at long in the market. Again, same targets, range quarter, so range high. So the favorable scenario is when you counter trend trading is wait for the deviation play. And when the trend is in your favor, so say, for example, if it's just in a range bound environment, then I'm more comfortable taking perhaps a retest of the range low, price consolidates, builds, grinds at that level. Then I'll start scaling in, looking for a shift in low time frame market structure, a higher high and a higher low on the lower time frame, such as a 1 hour to put more size in, and then looking for the reversion play back to the mid. So that's kind of the context of how I use ranges. I never get involved at the range quarters or the mid range. The mid range, I may get involved if it's a higher time frame, but if it's anything less than the daily, you'll often find there's a lot of chop, and you're met with basically equal buyers and sellers. But at the extremities, this is where you can execute a strategy such as you're looking at order flow. You're looking, for example, on Bitcoin, you're looking for late longs to get trapped into this region, and once they're trapped and price pushes them offside, they're going to puke. You're going to get that fast move down, and equally it's the same. So you're looking for trapped sellers. And essentially the same, you're looking for that unwind of shorts, and you get these fast moves back up again. So that's basically the 101 high-level overview of how I trade ranges. I think it may differ for other people out there, but that's essentially 70% of what I do. And I've refined it to such a way that, I've got a very, very successful win rate when I trade these high time frame ranges.